Welcome to Markets Now. I'm Michelle Rook along with Tomm Pfitzenmaier with Summit Commodity Brokerage. We're seeing grains all to the plus side with livestock futures lower and the cattle mixed in the hogs. And Tom, let's start off talking about the grain sector. Corn and soybeans seem to be trading weather as well as the lower crop ratings from yesterday. So putting some weather premium in.
Yeah, I mean, basically, this once we get this WASDE report behind us last week, that's all there really is to talk about is the weather, and certainly the crop condition rating dropped not a lot, but a fair amount, and is quite a bit lower than we tend to see it at this time of the year. So, yeah, you've got that going on, and now you're getting to the point where you've got weather forecasts that tend to reach out into this critical 4th of July period, early pollination period. And if we don't start to get some rain in some of these areas, it's going to be a problem.
Yeah. So how much weather premium do you think we need to put in, especially in the corn market? I mean, we did get above that 550 mark and kind of the 100-day moving average. We're kind of flirting with that, aren't we?
Yeah, that's exactly right. You broke up through 550, which was a resistance point. Like you said, you're up above the 100-day. If we can close above that, then there's not a lot of resistance in December corn until you get to that older high at 571. You break up through that, and then I guess a lot of people are going to have their eye on $6 again. So there's some resistance points along the way, but there's certainly an opportunity for better prices here. So I think the next 2 weeks, if you're a producer, is going to be critical. It's probably going to create maybe the opportunity to the summer. How high it's going to go, I guess we'll have to wait and see. But that looks pretty good today, anyway.
You bet. Some obviously saying this is a little too early for this kind of a weather rally. Others saying this is starting to maybe curb yields a little bit. And what's your thoughts on both of those fronts?
Well, it is early, but I mean, we also have a relatively low crop condition rating, which
Yeah.
is kind of surprising for this time of the year or unusual for this time of the year. So I think it certainly is justified. And you talk to people here and there around the Midwest, and you talk about how their crop looks, and not very many people are all that excited about it unless you got these little pop-up showers that have helped you out. So and keep in mind the futures market are anticipatory. You've got the funds short, well, pretty heavily short given for this time of the year. So you start spooking them out of the market or entice them into going long, and that sort of can exaggerate the moves a little bit. They never really got all that short soybeans, but they got down to almost flat. Soybeans are quite strong today, and I guess justifiably so. I don't know. Yeah, August tends to be the critical time for soybeans. So generally speaking, you don't get that excited about soybeans in June, but we hear a lot about germination problems, about stuff that went into and seeds that went into dry dirt and they're going to have to be replanted. Generally, that's not that significant, but maybe this year it is. So there's a lot to talk about and plenty of risk premium that needs to be put back in this market, given the situation we're sitting in right now.
Right. And to your point, I wondered if the fact that the funds were short in the corn market didn't mean that they did get spooked and we got a little bit of this early rally as a result of that. Soybeans, though, it's also about this rally that we're seeing in the soybean oil market, isn't it?
Yeah, bean oil has been nice. Well, we're coming into the period where this demand for bean oil to produce diesel fuel is going to start to pick up as we head into the last half of the year. Number one. Number two, that market tends to be tied pretty closely to the crude oil market. Crude's up today, so that's part of the reason bean oil's up today. Crude was down yesterday, and that's probably contributed to why it was down yesterday. Bean oil was down yesterday, but I think bean oil is kind of coming into its own and is going to be well supportive. You still got support in the meal from all the production problems in Argentina that has hurt their processors, so they don't have the meal to ship out. So that's sort of helped shore up the meal market. And the reality is, a lot of the fund traders or traders in general like to own beans. If you bought a bean contract this morning, you made 35 cents. If you bought corn, you only made 8. So there's some of that going on too. I think that's kind of tends to boost up the bean market a little bit.
We're running up into resistance, though, aren't we? On November, we're up in that 1245 area. There between there and 1250 is going to be kind of a chart point to watch, isn't it?
Yeah, I think that'll be minor resistance. I really think if they really kind of get excited here, I think really you have to look at more up in the 12.70 to $13 range as really the big resistance. I think those lower levels could be taken out relatively easily if we don't have any improvement in the weather forecast.
Yeah. So as I mentioned, wheat market was mixed early on. Now it's starting to gain some momentum. Is that just because of spillover, because of corn and soybeans being higher?
I think so. And if you looked at the corn and soybean crop condition rating last night, most of the improvement or the only improvement came in the areas that tend to grow wheat. So that's probably not helping the wheat market either. Then the other thing you've got in the mix on the wheat market, which is really difficult to figure out, is what's going on with the Black Sea corridor. Is it going to be open? Isn't it going to be open? The ramifications of that could be really important to U.S. wheat exports. Uh, so it's wheat's kind of tricky to trade right now with some factors in that are a little hard to predict.
Absolutely. It's tricky to trade. Cattle market, we are correcting today. Do you think we have a short-term top in that market, Tom?
Probably. It looks like technically you've gotten oversold. It looks like it's ready for a correction now. The numbers are still light. Weights aren't prohibitive. We have started to run into a little resistance on the demand side, both export wise and domestically. That may be giving the market some pause. Um, on the other hand, we haven't really started to withhold heifers all that much yet, so we got some numbers that down the road that we're going to have to deal with. But yeah, I think cattle got overbought. They needed to correct. Feeders are correcting because of the strength in the grain markets, which what they tend to do. So I don't know that you want to get real bearish cattle, but we should be setting up for a little correction here.
Yeah, and you think cash will be what this week?
I think steady the way it looks now. Maybe if the markets really fall apart on the futures, they'll come in a little lower. But I don't think so. I think the packer demand for the beef is really going to hang in there, and it's probably going to be steady.
Great. All right. Hog market has had a pretty good recovery off of the lows. We're consolidating a little bit today after a big update yesterday, but do we have much more fuel in the tank, you think?
I don't think so. My chart stuff shows hogs are wildly overbought, ready for a correction. And I think today's probably going to be is the beginning of that. So I think you could see a nice pullback, and then we'll have to see if demand holds up, see what the numbers do. Hogs, I don't know, the upside potential is all that great from these levels. On the other hand, I don't know that a correction is going to be real sharp. Probably a shallow reduction. Um, in price, and then I guess we're going to chop sideways and see how the whole meat complex shapes up as the summer grilling season goes on.
All right. Thanks for joining us, Tomm Pfitzenmaier, Summit Commodity Brokerage. That's Markets Now.